everyone. Over the past weeks, lingering uncertainty in oil demand has created nervousness on the commodity markets. Both the WTI and the Brent have suffered big losses, prompting a heavy commodity sell-off. This rush out of commodities has also been fueled by a strengthening dollar. So why are oil prices under pressure? How can we explain this dollar surge? And is it the end of the bullish trend in commodity markets? Let's welcome Frédéric Buzaré, Head of Equities at Dexia Asset Management. Hello, Frédéric, and thank you for joining me today.
Hello, Asha.
Commodity markets are suffering, weakened by the uncertainties about the global economy. So is it 2008 all over again?
The comparison is tempting. We are not living in a perfect world. Commodities are not just simply driven by the balance between supply and demand. You have also financial consideration. A weaker dollar for longer has been declared as the new conventional wisdom, and therefore people have shifted a huge amount of money in terms of carry trade to buy protection against a weakening dollar. They bought primarily commodities, and therefore suddenly when the dollar is strengthening, people have to unwind these huge carry trade flows, and this is explaining primarily what's going on the commodity market.
So at the beginning of the month, oil has lost more than 12% in a single week. So why is oil losing ground?
Coming back to your question, this is linked to the 2008 scenario. When oil is going too high, it's creating a destruction of the final demand. So the weakening of leading indicator is starting to take its toll on the oil price. So this is why maybe we are heading towards a soft patch, which is a soft replay of what happened in 2008.
With a strengthening dollar, oil prices will remain under pressure. So how do you explain this dollar recovery?
This is just a technical bounce back, and therefore it will be short-lived. The key issue on the US dollar is the fact that the Federal Reserve has no exit strategy. So as long as the Fed is not slamming on the brake, the dollar will stay weak.
The Eurozone economy is gaining traction. Can we expect a sustained growth?
Recovery will be sustained because it is no longer relying just on inventory rebuilding, rising export, but also improving final demand, which was the weakest link of the recovery. So the recovery will be sustained, but we will experience subpar growth compared to historical standard, but above the potential. That's really key. It's all about improving, boosting the growth potential in Europe through structural reform.
Commodity markets nervous, the US dollar strengthening, even the best performing sectors found themselves to be in trouble. So what are your expectations for the coming months?
We are cautious for the coming month. We are clearly witnessing a sector rotation toward defensive, and we do expect that this sector rotation will continue for some time.
So what type of defensive stocks are you talking
about? Yeah, you should be very careful about defensive, because not all the defensive are defensive, especially telecommunication operators are suffering from a structural decline. We still prefer consumer staples, which are really defensive. So the question is, to find the right timing this year to come back on emerging market-led stocks, on growth stocks. That's the direction of our strategy, and we believe that as long as the trade-off between growth and inflation is still deteriorating in China and Southeast Asia, it's too early to come back on these buy and hold stories. So cautious in the short term, but be ready and determined to jump back into the gap-related stocks.
Well, Frédéric, thank you very much for sharing your views with us today.
Thank you.
And thank you for watching us, and goodbye.